Manish Sonthalia is with us. He's Senior Vice President, Head Equities, PMS with Motilal Oswal Asset Management Company. Manish, good morning. Great to have you here. Thanks very much for your time. How would you rate earnings so far, Manish? Have they been significantly better than what you expected?
No, not significantly better, but they have not disappointed also so far on an aggregate basis. But initial part of the earnings season is always like that. I mean, crucial would be, the PSU bank earnings after your Axis Bank and ICICI Bank, and then we have the metal and the private sector capex and construction companies which will deliver numbers. So that would be in the latter half of this month. Or maybe towards the middle of this month. So I don't think earnings have really disappointed so far.
If you exclude PSU banks and metal mining companies and take a look at others, I mean, actually, don't talk about banks per se, private even. Not very much difference left now between private and public, at least in some cases. So exclude banks, exclude metal mining, and look at others. Then do earnings kind of leap ahead of expectations? What we've seen so far?
It would be better than expectations. If you were to exclude these sectors which you just mentioned, I think earnings are better so far than what the preview told us. So in a way they have not disappointed.
But do you think they are a function of actual, gross margins improving, flowing through down to the net level, etc., those kind of operational things in a big way, or they are simply a function of the bar having been brought down quite a bit over the past many quarters?
No, whatever consumer companies have delivered numbers, obviously we have seen some increase in gross margins, but the increase in gross margins have come down from the previous quarter. And this was more than expected, that gross margins are not going to be the same. The expansion would not be the same that we saw in Q3. And obviously the base effect on raw material prices are now taking a toll on the gross margin expansion that we have seen so far. But the gross margin expansion more often than not is seen to be flowing down to the PAT level.
Yeah. Okay, fair enough. Now, too early as well, right? Some of the more troubled, stressed companies usually come out later in the day. Absolutely. But about 30% of mid-cap 100 companies, top 100 companies have reported. So it's not very small, a small sample as well. What do you make of the bank earnings, the private bank earnings, especially what we've heard from ICICI Bank, Manish?
So I think IndusInd Bank was a decent set of numbers. HDFC Bank delivered the usual 20%. Obviously Axis Bank and ICICI Bank had an element of negative surprise. Another way to state things now, the watch list. So in a way it's sugarcoating the entire problem. Not very happy scenario on these two banks, and obviously it is evident now from the commentary that problem is plenty as far as the asset quality on those names are concerned, and it's not going to go away in a hurry. Obviously it is having a repercussion on the stock prices. So these two names were a major disappointment. We have the likes of Kotak, which are yet to deliver numbers. HDFC Limited, again, is one name which needs to be watched out for. So that's how things are. It's a mixed bag as far as the private sector bank numbers are concerned. Usual ones have delivered, the suspicious ones have not delivered, and there are more problems than what was thought.
Manish, just a more philosophical question. The market obviously knew about these problems, right? They perceived that there are problems with ICICI and Axis loan book. And that's why the price is where it is. Or you think there is some element of surprise? People suspected that things are bad, but they were afraid to quantify the scale of the problem.
Yeah, so this is how the stock market operates. Everybody knows about the problem, but when it comes out in the open, then only the stock prices react. So, we are all expecting a normal monsoon. So, if monsoons are going to be good, stock market should rally. But stock markets tend to rally when there is a good shower in Mumbai. So, this is how stock markets operate. There is nothing to be alarmed about this whole situation. And now that it has come out in the open, the quantification has come out in the open, things are falling into place. What was thought about the asset quality on these two names, it is now out in the open.
Yeah, no, Manish, what I'm saying is the stock when the numbers, when the bad news came out, it was already at 230, 235, right? It's already done poorly over the last couple of years, very poorly. Correct? I'm talking about ICICI Bank. After that, stock goes down 2-3%, 5%. Well, that's hardly anything. And that's expected as well. I'm just saying that the market already. So when now you hear people saying, well, the stock already prices in a fair bit of the problem. And I was reading this, many brokerages, etc., saying that. So
it is
which means the
pricing
market
in a lot of problems.
has valued it. Yeah.
No, but there are negative surprises coming every quarter now. 45,000 or 44,600, 700 crores of watch list. And already at 5.8% gross loans, gross NPLs figure. Is there a case for negative surprise? Obviously, the answer is a yes. Did the markets factor in this sort of a negative surprise? The answer was no. And Axis Bank, you don't even know what the situation is, because obviously the restructured book slipping into NPAs doesn't really throw up a very realistic picture. So what I'm saying is that yes, from FY17 the bar now moves to FY18, and people have started looking things on an FY18 basis, and FY17 is a washout for the problematic private sector banks. How the things could revive will be reacted upon as and when the situation is. But obviously, when these numbers have come out, it's not a very happy reading of the numbers.
Right. So now from here, where could the surprise come in from? Of course, I mean, every bank will see some increase in NPL. That's the natural organic growth in terms of NPL. That's fine. But do you think that in a way the dirt is out? We now know what is the total stock of whatever these watch list loans you want to call it or whatever. You're shaking your head. You're saying no. We don't know the scale of the problem with their existing stock of loans. Is that what you're saying?
No, the watch list slipping into NPAs. What percentage of the book slips into an NPA? This is the watch out number. So Axis Bank says 60% of the watch list would slip into an NPA. We don't even know what the figure could be for ICICI Bank. So there is where the negative surprise could come from.
If you were an analyst, a fund manager considering an investment and you had to make a judgment, what percentage of this could slip? What would you say? What would you assume?
Don't know, yaar. I mean, it's very difficult to take a call because these are all problematic assets, and 60% is a good number, but who knows what the number could be, and it would have repercussions on your capital situation in these two banks. But more than 50% is a definite figure for this watch list, because the sectors are very troubled, and there's no question it is going to come out of the troubles in a very big hurry. So obviously the government is trying a lot for the iron and steel sector, giving a lot of protection and so on and so forth. But how quickly the problem can be mitigated is anybody's guess. And we are working on a 90-day past due NPA, requirement. So obviously there could be recoveries, but once it could slip into an NPA, and this number could be more than 50% of the total watch list figure easily. It could even be a higher figure.
Do you own Yes Bank, Manish?
No, we don't own Yes Bank.
Why not, if I may ask?
I mean, we have better banks. We have HDFC banks and Kotak, so we like them more than Yes Bank.
Right, right. But the numbers from Yes are just incredible, right, Manish? Or is it a case of too good to be true?
Yeah, the numbers were reported numbers were good, and there's every reason to believe that the bank is doing well. But there's a capital raising program that is coming through. Obviously, you'd see some dilution, but the bank is performing okay.
Okay. So you mean in financials you own HDFC Bank and Kotak, is it?
Yeah.
The Shriram City, Shriram Transport, those names?
No. We don't own any of them.
Any
And
other
obviously, in some of these
NBFCs?
names here, NBFCs, Bajaj Finance is something we own. HDFC Limited is something we own.
Okay. Fair enough. So, sorry, you were saying something. I interrupted you there. What were you saying, Manish?
This recognition, the bucket changed from, let's say, a 180-day past due to a 150-day past due, and obviously over some time it will be 90-day past due recognition. And in some of these names, you're seeing the gross NPA figure actually bloat up. So by the time we come to 90-day past due, it could be a very abnormal figure of 9 to 10%. We don't want to get into that situation. So that is the main reason why the Shrirams are being avoided, both Shriram City Union Finance and Transport.
Okay, fair enough. Fair enough. So, I mean, you have absolutely no intention of changing or buying anything new. Just sitting tight with what you own in the financial space, right?
Yeah, absolutely. I mean, we own the best of the asset quality, whether it's be Bajaj Finance or a Kotak or an HDFC Bank. Banking is more about management of the balance sheet rather than the P&L. P&L, you could show some very good growth in terms of loan disbursement and booking of NIIs, but the money has to come back. Obviously, in India, everybody can take money, but once you give a loan, that money should also come back. So asset quality is most important, and return on assets rather than ROEs is what I look out for in NBFCs and private sector banks or any other financial services company that one watches out for.
Right, fair enough. In the consumer space, right? Be it durables, staples, discretionary. What are your thoughts? Are generally stocks very, very expensive?
Valuation is always to be looked at from a moving target, and obviously the hope is that monsoons are going to be good and rural theme is going to do much better. So second half of the year should be very good for the consumer space per se, whether discretionary or staples. And we continue to like the names for a long time, and we are maintaining a very positive stance on the consumer space in the second half of the year. And valuations will get supported because even in the current quarter, don't see any problem of earning around 15 to 18% sort of a growth, which is quite good in the sort of scenario that we are operating in. And in the second half of the year, these guys would also have some pricing power. So because your inflation is going to be not into a negative territory, it's going to be more into a positive territory. I'm talking about the WPI. And that would tend to give some sort of a pricing power to increase prices, which has not been the case so far. It has been more a case of only volume growth. So from that point of view also, don't think the valuations are expensive at all.
But again, I just come to, you said valuations are a moving target. So I'm assuming you're saying, well, there could be positive earning surprises, especially starting the second half, which could.
Yes.
What pockets exactly do you like there?
So mostly concentrated on the rural themes. So within consumer, it would be the motorcycle companies. We have an Emami. We have a Voltas. These are some of the discretionary staples, autos, rural theme plays that we own in our portfolio.
Any thoughts on what's happened with Jubilant Foodworks recently, Manish? 50% is that, in a way, Lakshman Rekha, right? Defines promoter interest and commitment. Promoter stakes got down to 45, 46%. How do you view it? I mean, there is the business and then there is...
Results are yet to come out. Results are yet to come out. What I read through was that the parent company also didn't report that strong a number. It has no bearing on Indian subsidiary. So difficult to say. Let's see the numbers and take a call as to whether sentiments are improving as far as same-store sales growth, etc. is concerned. But if things were to improve, it will only improve in the second half. I don't know. Let's see what the numbers are. Let them report numbers, I would think.
Fair enough. No, but do you like the business, underlying business, franchise, etc.?
No, I mean QSR is a very attractive space, and if there's one business model in the entire eating out space which is very scalable, it is the QSR space, and these guys are the pioneers. So from that point of view, the business is very good. But how does the pricing work? You can't price a pizza too expensive that it goes out of the affordability bracket and so on and so forth, and your pace of expansion, and it's a mix of creating capacity and getting your utilization or sweating out those capexes which you have been doing at the earliest, because obviously it's a high gross margin business, but you can't take it out of the affordability bracket. If you price a pizza too expensive, the customer just withdraws, and obviously when there is lack of job growth and we are living in a inflationary environment as far as CPI is concerned, somewhere down the line gives a sense that the pizza may be priced too expensive.
Yeah, absolutely. But I think adjusted for all the discounts, which sometimes run at least three days a week, I think the pricing just about comes down to more, I guess, affordable levels. Okay, all right. Let's. Are you seeing some slowdown in the consumer space again? I'm talking about, say, two-wheelers specifically. I don't know if you looked at the Royal Enfield numbers. They're up about 40% year on year, but compared to expectations, they are slow. They're lower by about 10% or so. I don't know. I mean, are you seeing
compared to last month?
Yeah.
Yes,
they're down 6%.
And a half. Yes, 51.5 and now 48. I don't know. We have to analyze the reasons why we are not seeing a full 50,000. Obviously, on a month-on-month basis, they are not what we had figured out. It's coming below estimates, and even on the CV side, as far as Royal Enfield is concerned, as far as Eicher Volvo is concerned, VECV. So, but on a YY basis, numbers look good, 40% plus, and here 30% plus on the VECV side. But yes, a tad slower. We just have to figure out why this is the case. I think it may be something to do with the marriage season. You have lesser number of, maybe, I don't know. We have to analyze the reasons.
Okay, fair enough. So you're saying it's unlikely it's because of the demand issue, right? I mean, last I remember they said that they have 3 months, 3 month waiting period. So I mean, it doesn't look like a demand issue.
That remains. That remains.
Yeah. What else have you done recently since the last we spoke in terms of new stocks you may have added? Any area specifically where you changed your views? Anything interesting? Go on, Manish.
No, so I think we are analyzing the earnings season very carefully. We have not really made too many changes, just a tinkering of allocation here and there, that's about it. No major changes in the last 1-2 months that we have done. And we don't see the need for a change, as far as our asset allocation to sectors are concerned. It's pretty good. But I would tend to feel a bit more positive on the consumer space as we move into the second quarter and beyond. And there may be a case that we might just increase allocation to the consumer space. This is one of the spaces which is totally hated by the markets and under-owned. So if you tend to get a negative, positive surprise on the stocks are actually going to fly. So I tend to remain totally opposite to what the market thinks as far as the consumer space is concerned, and will tend to increase allocation if I'm more confident on the numbers which are going to come out this quarter.
Fair enough. I before I let you go, I want your thoughts on Interglobe, which has also reported numbers. They've increased
Numbers
dividend
were good.
payout and yeah.
Yes. Numbers were quite good. I think they're still maintaining 109% return on equities and more than 90% of the total profits have been paid out as dividend for current year, including the dividend distribution tax. They are creating capacity. Capacity is supposed to increase 34% in FY17, 136 planes. We just need to see how the yields are going to shape up. Because once you're creating this bigger capacity, demand is good, agreed, but oil prices are also tending to move up, and they have to have a balance between filling up the seats of the increase in capacity that we are seeing and earning a requisite yield on that, because we've seen the yields actually drop as far as the fourth quarter numbers are concerned, because they created capacity, and yield is a function of the capacity creation which they were not able to fill to the required extent, or maybe that is the case. The load factor seems to suggest that they are compromising on ticket prices, although the entire decrease in fuel prices have not really translated into a decrease in ticket prices. 29% decrease in fuel costs in the fourth quarter results into a 15% decrease in ticket prices. Obviously, some of the gains have been retained by the company. How this interplay between yield, load, and capacity plays out is what needs to be seen. I think a 30 to 40% sort of a profit growth for FY17 should be the case, or maybe something like that. And that would mean if we are at 2,000 crores of profit for FY16, we should be roughly at around 2,800 crores of profits if they are able to maintain yields and the load factor. It should not be a challenge given the passenger traffic growth that we are seeing in the system. And a 15p on an FY17 or a 12 to 13p on an FY18 is easily sustainable. I don't see any case of the stock price, falling below the 1,000 rupee mark in the worst possible situation.
1,035 on Interglobe at this point. Manish, it's a pleasure always. Thanks very much for coming on.
It is a function of as we progress into the coming quarters and the numbers are kept on getting delivered, you tend to see the stocks doing well.
All right.
Thanks.
All right. Got it. Thank you. Thanks very much, Manish. Really appreciate it.